Quatro Casas and Merger Market hosted the second edition of the M&A Outlook Portuguese Breakfast Briefing. The forum gathered around 220 senior delegates, including company executives, banks, funds and advisors. Cristina Casalinho, Chair and CEO of the Portuguese Treasury and Debt Management Agency, was keynote speaker. Portugal's M&A deal value in 2018, data until October, currently stands at its highest value on record, 61 deals worth 27.2 billion euros. On average, 3 out of 4 M&A deals in Portugal are inbound, and most of the foreign investment is European.
The M&A in 2008 in Portugal was very positive. Regarding the next year, I would say this last trimester will be positive, but we never know if these ongoing transactions will close until the end of this year. So I would say the first trimester of 2019 will be very positive, and I'm very optimistic for 2019.
Well, 2019 is going to be for sure a positive year, although it's going to be challenging to continue to grow at the same pace of the previous 2 years, which were very good in terms of M&A deals in Iberia. Relating the sectors, Portugal will have sectors with important deals like in the energy sector, TMT sector, real estate, and also in the traditional bank and finance sector. In terms of Spain, we believe that real estate will have important transactions, but there is a specific sector which in Portugal has not been as relevant in the M&A sector, which is the industrial sector, that will continue to be very strong.
In terms of private equity, there has been a slowdown in activity overall, but the outlook remains positive.
I'm expecting 2018 to close on a very positive note in terms of private equity activity in Portugal. Portugal is now very hot and sexy, both for international funds and local funds. I guess one of the new trends I would signal is the fact that we have new private equity players in Portugal, local funds, both raising local capital or international capital, investing in family-run businesses. We are having a lot of transactions ongoing and very interesting investments also in the pipeline.
On the wave of its recent economic revival, Portugal has become an attractive destination for international and local funds looking to invest in medium-sized, family-run businesses.
Core Capital believes that the Portuguese economy needs a restart, especially on the SME sector and especially on the family-owned business. For those who don't know the Portuguese economy is made out of small and medium-sized companies. 98% of the Portuguese companies have less than 10 employees, and they were mainly family-owned. 70% of the companies are family-owned. The managers have less than 9 years of formal education, so there's a huge need of new management skills in order to prepare these companies to the second generation stage of the economy, and especially Core Capital deals with highly leveraged, indebted companies. So what we propose to these shareholders, old shareholders, is to restructure their debt, change their management, and give an opportunity for the companies they founded 20 or 40 years ago to have a restart.
In a fireside chat, the heads of M&A of A Padaria Portuguesa and Grupo Multifoods, 2 major players in the food and beverage space, discussed their business models, recent acquisitions, and future plans for growth.
Multifood Group is mixing organic growth with acquisitions. This year, 90% of the revenue becomes from organic growth and 10% from M&A. So we trust in M&A. We currently have 20 brands and we want to expand in new niche of market, in new segments.